Welcome back, my passive income investors. I like to. My goodness, AMC, GME, BlackBerry, what the heck is going on with meme stocks here, folks? Now, I thought this would have blown over, but I think this story is starting to solidify itself as probably one of the greatest short squeezes, setting an entire precedent for the way we see the market operating. The little man, the retail investor, has finally figured something out. And it's a Reddit forum. Apparently, we can all just get together and destroy billion-dollar hedge funds. And I was just joking a little earlier on about, it'd be fun to see these actual hedge funds and how much money this makes as a drop in the pond to them. I mean, it's a serious conversation, right? Because we always hear about us, these small guys, these millionaires. Maybe you see a couple billionaires talk about their investments. But then on the other spectrum of it, there's people managing trillion-dollar funds. I mean, you take a look at Vanguard, you take a look at BlackRock. And I mean, we get to sit down and really analyze a lot with what goes on in Apple at those board meetings, and they're managing, $100 billion of dollars. But when it comes to these fund managers specifically, it's a lot of hush-hush, right? And I always think it's so funny that there's like a veil going on one side of the scene, and on the other side of the scene, it's just media calamity that we are about to witness. I mean, I'm watching AMC right now, sit at about $57, hit a high of 60, and the only reason I'm doing this stream is there's people in our chat groups sending me screenshots of their riskier investments taking their accounts to six figures right now. And I mean, this is just oh my God, guys. Oh my God, that's all I gotta say. Very, very good stuff to be taking a little bit of profit here. I mean, this definitely profit-taking time. We're seeing a cool down right now, and it wouldn't be surprised after the 3 or 4 halts that we just had in the last hour here, if this thing starts to bleed and cool off a little bit. Now, I want to talk a little bit more on the back end of this and just kind of go over like this meme stock generation thing that I think is going to solidify itself as a whole new pattern to the market. Because like I said, this stuff we thought blew over with GME, and I'm really happy that I got a little bit. I want to start buying silver coins or even gold coins for that matter, if I could, that kind of have these little art pieces in them, because I got this for my birthday, and I'm so happy I have this, because it really solidifies this period in time where these stocks are just becoming like historical, because these were bankrupt companies, right? Like, let me see if you can see that, because it just has the AMC and everything on it. But these companies were bankrupt, folks. I mean, it's so crazy to me that these companies are at scale right now to sit on the S&P 500 again, for that matter, which is just mind-blowing in the first place, considering, again, most people would have thought these to be bankrupt. And then what happened is Reddit just funded their entire accounts, loaded the banks back up for them, because obviously they're diluting. And they're back in business, baby. If they'll find a way to make it work. They got the cash now. I mean, this is like a turnaround story at a level that literally is unprecedented. Like, anybody with 2 cents in their head would have looked at the balance sheet, looked at the business, and I mean, said, nope, no thanks, not for me, right? But here's Reddit looking at these big conglomerates, staring down these poor little companies, saying, hey, we could all just short them, destroy them into the ground. Let's short more than there is even shares on the market. Completely just bunk this thing. And there was just some people on Reddit that were like, hey, this is kind of douchey, right? Like, why are you doing this? Like, why would you try and destroy a company like GameStop that many of us do have good memories about, but God knows brick and mortar is dead when it comes to downloading video games. And it's just like, it's just this weird cross thing that happened in this weird moment that just led to the calamity that we're seeing right now with AMC back over $60 a share. And it's just incredible, right? Because one person started an effect, and here we're sitting now. And these companies are literally back at $30+ billion in valuation. They're actually holding insane valuations for what the business models currently stood. No regular investor would have ever pulled something like this off. But what it does is it shows, it kind of takes the veil back behind these big conglomerate hedge funds. And it's just really interesting to see, like, do they even care? I mean, this is the question, because behind the veil, these are drops in the pond. If you're running a $500 billion fund, guys, you losing a few billion right now probably doesn't move your account much more than 0.5%. That's the reality on the other side, which is why I don't think we're ever going to see that veil ever really get lifted. But it's a fascinating curiosity to be a fly on the wall if they actually even care or even know what's going on Reddit right now. But that's the story here, folks. And just taking a look, let's see what the other ones are doing. You got BlackBerry just trading up 20% right now. I know Nokia's been trading in here at 4.82%, but it's not nearly as entertaining, obviously, as AMC basically taking the new pivotal role for what GME was. And I'm pretty confident that this isn't the vast majority of the shorted shares right now in the market, because a lot of people have run the math on this, and they could, if the full turnaround happens or everything. I mean, on a percentage basis, for this thing to get to $1,000, I think is dreaming. If it happens, I will gladly bow down and say I'm wrong. But I think that's getting to a point of a little bit of insanity to me, because these are big numbers we're talking about here, like crypto size numbers. Like, look at the crypto market. Unless that's where all the money that just came out is going, I mean, I would start seeing this to be a peak, considering, I mean, we saw GME peak right around 30 billion before it started pulling back. I wouldn't be surprised if the 30 to 40 billion dollar range is where we're going to peak again, because it's just probably the same kind of crowd, the same validity as GME, just shifting. So if you're diving down into these right now, might be a little bit hesitant here, just because, again, we're obviously seeing kind of like I'm not a chart guy, I don't trade, but obviously with head and shoulder pattern, blah, blah, blah. The thing is leveling off here. So it's just a matter of what happens. Do these people really have diamond hands? Are they going to hold this? Or are we going to start saying people, hey, you know, like my buddy, he up $100,000 in his account off this, is saying, you know, this is a lot of money. I mean, you don't want to just. I don't got diamond hands. I'm not like that Dogecoin millionaire. So I'm definitely not. I'm definitely not diamond. I don't got diamond hands. I'm paper hand all the way. I don't hold my pride in diamond handing by any means. not with this run. But we're gonna see some fascinating stories come out of this. Just keep buying them dividends. Yeah. Hey man, I got a long list of dividend stocks right now. This has been a tough market to invest in. It's been a 180 turnaround. I'm more hesitant. I made a whole video yesterday talking about a potential crash. Everybody's pointing it out at this, and I think the writing's on the wall at this point that we are definitely heading towards some kind of a correction or a recession. I don't know what, not a recession, but perhaps a correction or a crash. I don't know what it's going to look like, because it's just so hard to imagine that a company like Facebook or Apple trade at a discounted level to the actual S&P index PE. Like, the S&P 500 trades at such a super high multiple. It's in like the 40s, mid 40s. So it just doesn't make any sense for the markets to be trading up at these levels when even the largest companies in the market aren't even trading at those levels, which just means there's obviously a lot of froth and more risk, perhaps. I'm not sure what the whole deal is, but it's just, there's a lot of speculation going on with margin debt. Housing right now is at an all-time high, and a frenzy. We know that's a frenzy. We know that's a bubble. I mean, I wouldn't say a bubble per se, depending on the market precisely, but it's risky. We're in a risky market right now. It is a seller's market, not a buyer's market here, folks. So you want to make sure you're diligent. I'm stacking a ridiculous amount of cash for a lot of reasons. I like having cash right now, but I'm also finding really good stocks, because I'm not one of those people that's like, oh, you hide, be afraid, be deathly afraid. Go, you know, who cares, guys? You don't invest based off market crashes. You're not trying to time the market here by any means, but I am finding some good value plays. I can throw you a few hints. I want to make videos on them. I'm looking at renewables still. I mean, go take a look at Algonquin Power. It's a funny word saying. I actually live near Algonquin Park. However, Canadian utility, guys, really boring. It's trading at a great discounted value, 11%. It's completely diversified across the board. It's basically an even spread between renewables, transmission lines, which I love the transmission lines, great business. They have natural gas. They're also involved, what's the other spectrum? I can't even remember. But the company's so insanely diverse. Oh, water. That was the big one. The water and the waste treatment. Beautifully diversified renewable, paying a 4.5% yield right now, 4.4%. Algonquin Power. I think it's a utility for a Canadian that I'm going to pick up. But it's a rarity. Let me know, guys, what stocks are you looking at? I'd love to hear anything that has to do with value right now, because I really like big tech still. I mean, like I said, Facebook even trades at a discount at the market. Why do you hold your funds in VOO? Or sorry, that question kind of confused me there, brother. We'll go quick questions and answer period here. Why do you hold your index funds in VOO USD and not VFV CAD? Because you still get you end up paying more fees doing the conversion all the time. It's just, it doesn't make any sense for VFV, guys. You just want to, if you're buying US stocks, you want to buy it in a US account. It's just as simple as that. You want to keep the currency separate. And it just doesn't make sense to me, because look, you pay more of an expense ratio on VFE. We're in a really volatile market for dollars right now. The dollar fluctuations are bloody insane because obviously we're heading into moments of hyperinflation. We're getting into moments where, you know, the US dollar just printed 30% or 20% of the entire float within the last year. It's stupid. It's just stupid to hold to hold the different currencies because you just don't you don't know where you end up half the time. So it's just like just separate the currencies, never really convert them back. For me anyways, I do Canada US. I mean, I'm going to go to the US, I buy US dollar stuff all the time. I keep my currencies almost 50-50 split. It's just what I do. So and I'd rather own whatever the main thing. Why would you own just my opinion, just my opinion. I like VFE, but I prefer to own it in US count. But you wouldn't be paying any fees buying index funds on the TSX as I'd rather own, I like US stocks more. If you have a portfolio, I see a lot of people that are new to the market right now, and I love the Canadian economy. I think the Canadian economy is going to blow up, but right now is the time for Canadians to be shifting cash to USD and buying AAA rated companies, the companies that run the bloody planet. Your Google, your Microsoft, your Facebook. If you do not own these tech giants, this is your opportunity. They trade at a discount to the market. They're growing revenues at a pace penny stocks wish they could grow at. Even the best penny stocks have a hard time growing at Google and Facebook's growth rate right now. Get those things solidified because this is your time to do so, and then shift your focus into fun thing. I mean, you guys could be doing AMC right now. AMC is a great, I mean, this stuff is awesome to me. To be a part of this stuff, guys, this is what makes the market exciting to me. There ain't nothing wrong with buying into AMC if you want to play these trends. Just play it with the right volition, the right, approach it with the right strategy, because I get scared when people don't tell me they have exit strategies. They're diamond handing. I don't like that. There's no moral higher ground in this game, folks. You're just trying to walk away and make some dollars. No one cares about the guy that made a lot and then lost it all, And I'm not saying AMC is going to go broke. I'm just saying, if you're up a lot, just take 20-30% off the table. Do what Kevin O'Leary does. Turn that into cash flow, and every 20% it goes up, pull a little bit off the table. That's what I've done with literally every growth stock I've ever played. It's the best way to not lose money. Just a little bits all the way up, right? But putting that aside, yeah, what stocks? I heard somebody threw a Tilray in there. I haven't looked up Tilray in forever. Maybe I'll pull it up real quick and see what's going on with Tilray stock. I'm not buying into the spec side of it. I'm just looking into these foundational growth. I'm going to round off my growth by buying into Google and Amazon next. I have them on my list. And I've been looking at a lot of dividends. I've been looking at a lot of SoFi. Yeah, the IPOE is coming back too, is it not? That's a good growth play for sure. Actually, it's a great market to be looking at these kind of speculative growth stocks when you're talking about the straight growth end on the small cap scale. But be careful, as the innovation stocks, as Kathy would call them. The only reason I'm saying being really careful with that right now is we are going into a secular shift in the market. If these new regulations come into play for capital gains tax, which is going to be on the first 400,000 or 500,000, that doesn't make a difference to me or you. But again, when you're running a multi-billion-dollar hedge fund and you're options trading and trading on a regular basis and buying into these more innovation-based stocks where you might be trading again more in and out of them, you're paying more capital gains. So a lot of these funds are going into the secular shift of value, precious metals, because what they want to do is park capital for a longer period of time just to see how these new regulations might come into play on the tax front. So I mean, just be careful, because that's why we're losing a lot of steam in these traded industries. In my opinion, that's why value stocks are up so much. Because people are just a little hesitant, I think, on what's going to happen. I mean, I've cut back huge on trading. I'm not trading as much. There's too much margin in the market right now. You just got to be careful what's going on here. There's a lot. I don't know if the markets would crash, but I think we would head into some volatility. A lot of volatility coming around the corner, folks. That's all I know. I don't know what's going to happen. We could go up, we could go down, but I can guarantee you one thing: volatility. Who knows? Maybe it just goes up. Seems to be all it does. Enbridge. I'm not a fan of Enbridge personally. It's not a stock for me. I've looked into it here and there. It's just a really big one. I don't know. It is what it is. It's not a bad company. I shouldn't say that. It's not a bad company. Oh yeah, let me look up IPOE here real quick. Sitting at $20. No, that's not the right one. Why didn't it come up? Oh, I'm losing my voice here, folks. Rambling like a madman. I've been making videos all day. All right. AMC, baby. So what's up? Who's winning this game? There's got to be some people in here that are winning, taking over the AMC world. Debating on holding my dry sketch versus extending the position in RioCam BNS. Yeah, I don't. I would look at over Northland Power. I love Northland Power, but I got into it at a price point that made sense. It's hard to justify a PE of 30 on a renewable, even though it's a utility like every other utility. It is growing really fast. They're doing a great job, sure. it's just a really high multiple. I would honestly look into Algonquin Power. I love Southern Company. Like, I mean, these other really large utilities that have a base are expanding into renewables. You get the same diversification, but I think you're a little safer off. Again, I'm actually a little bearish just because they're having a few issues keeping the power generation up in some of their Northland Power's production in the Gemini project and stuff. It's holding them back. I'm surprised you picked Hydro One over Algonquin. Like I said, I'm going to buy Algonquin. It's on my buy list right now. I think it's at a great value. It's trading down. It's paying about a 4.5% yield. I love it. Love it. I sold AMC calls yesterday at 33, bought back at 37. Started this morning long on a few pennies. Well, yeah, that's kind of interesting. Congrats if you're taking some profits there for sure. But yeah, AMC. I can't believe AMC's holding up, folks. I mean, we're literally sitting at $63 still, trickling a little higher. We'll see if we can break into one more squeeze before the end of the day. I think here's my bet. More likely we see a pullback. Let me make that bet right now. I bet you it's more likely because of the consolidation and just the fact that like it's playing this rocky ride right now. Don't quote me on it, but hey, let's see what happens. It's 2:00 right now. Market's got a couple hours left and we're holding flat. So let's see how the day ends. Not wishing ill will against anyone. Like I said, it just seems to be the pattern that it's trading up against here. It's doing a few little heaves and hurdles, and like I said, we're sitting at that literal same market cap area where GME started selling back off. So it'll be neat to see if there's any indicators, or again, diamond hands. Who knows? We'll find out. We'll find out. Putting that aside, though, folks, any other stocks before I head off? I just wanted to do a quick, just fun video here. Put on my silly glasses. This is a silly market moment. I think it's awesome. It reminds me of why I love investing so much, and I love watching people do. I love watching people do really well. I mean, I love when new people get in the market and they stumble into something like this. And all of a sudden, you know, and I hope for the best it works out. Because, I mean, I was no by means any lucky when I first started investing in the market. I lost half the money that I invested. But I'll take a look at Lightspeed as well. But yeah, it's just I love when new people get in the market and they do excessively well. Because usually what happens is they end up with a large sum of cash and they're just trying to figure out their portfolio strategy. But it's just those moments, I think, hopefully instill a little bit of fear because the people around them are usually saying, hey, you know, there's a lot of money. Like, you want to be careful with what you're doing with it. You listen to people like Kevin O'Leary, and like, there's so much information out there now that I think people would make smarter decisions. It's just in those early days when you only have 5 or 10 grand to invest. And I'm looking at YouTubers right now. I want to comment on their channels and I don't, but when I look at like a portfolio of $5,000 diversified between like 8 or 10 different holdings and 3 of those holdings being ETFs, especially considering these people are around the same age I am, it's honestly a little bit ridiculous in my opinion, because I think they're underappreciating the risk that they actually have available to them to make a higher percent of return. Because no offense, guys, $5,000 is nothing. Like, it's a shame, but it's in the market perspective, guys, it's almost a joke. Like, you're better off going and finding a job where you're going to make a higher income and make an extra $5,000 a month, because that's going to yield a higher return than you putting $5,000 into a diversified portfolio of 10 stocks. I'm sorry. Like, unless you can start shoveling large amounts of capital, I would just take that 5 grand, find 2 or 3 stocks. That's all you need. 2 or 3 stocks. 2 or 3 stocks you like that makes sense. Hey, Facebook, path of least resistance, in my opinion, to making a guaranteed return in the next 3 to 5 years. You find something like a Smart Centers. Exactly. Smart Centers, beautiful stock. Maybe throw some in there. Going to get a real high dividend yield. So at least that 2 grand might be making you, an extra $120 a year? Boom. You're making an extra $10 a month off a really simple investment into a REIT. Now we're going to get some really good growth and, maybe a 20, 30% return on Facebook a year. We're going to get a 6% yield right off an extra couple thousand of that. And then if you got another couple thousand to invest, find something you like an AMC, maybe trade it around a little bit, have a little bit of speculation with it, because again, 2 grand is pretty replaceable in my opinion. Those the great things to do, guys, if you don't have a lot of money and you're investing in the market, because when you listen to people like me, I'm older, I've been in the market for 7 years, it doesn't make sense for me to do that. It would scare me to do that because it'd be too much risk. What do you think of all-in-one ETFs like VGRO? I'm not looking at ETFs right now because I told myself, and I'm going to hold myself to it, I kept telling myself, for as long as I outperform the basic indices on a steady basis here, I'm not going to buy index funds until I'm 30. And that seems to be the case still. And I know I was buying into QQQ, and I know I've been looking at VOO, and they are on my buy list, and I want to cost average into them over the long term. I just recognize the reality that I still consistently, I'm well above like market average returns. I mean, my portfolios on average are up 280 or 300% in the last 3 years or 7 years. So it's just like, I'm in a good moment here where I just want to solidify my portfolio going into my 30s for dividends and growth. So I don't have to look at it for the next 5 years, because I'd like to get to that age of hopefully financial independence by around 35. I figure I can achieve it a little quicker than that, but probably if I'm patient with it and I give it a good 5 years from here, like I'll easily be sitting somewhere between $500,000 and $1 million. And obviously, if you can invest that, depending on how you want to invest it, you make 10% or 8% on that a year. I mean, that's a decent income to lean back on, or you could just invest it in higher yielding stocks and decent REITs, get a 5-7% yield on average. You know, you're going to be making $30,000 a year, no problem. But that's I don't know. That's not the fun part of it, though. The fun part is what we're doing right here. But again, I'm also working on a different structure of my income too, right? So I mean, I'm more focused toward my income right now than I am my stocks. Stocks are supposed to be passive, right? Unless when you drown yourself out to news like this every day, it's a great conversation. It's a fun learning tool, but you got to understand, like, a lot of this is noise. A lot of it doesn't have any meaning to your life. It's not going to add to any substantial, like, it's not going to put food on your table. So just be careful when you're listening to endless YouTubers talk about meme stocks, because you're probably not the guy making a lot of money like people in our chat group are, because I'm not making a lot of money on it. So you just want to be cautious, guys, with some of that stuff for sure too. But anyways, 20 minutes deep here. Any last comments, folks? Last comments. Let's go. Talking stocks, baby. Building a portfolio. You want to start small? Think big. Only own a few stocks. You're already starting big. Think a little smaller. Diversify it. Get those sector allocations worked out. Figure out what you're doing with it. So I mean, I'm mitigated on most of my risk, because again, I'm career focused right now. Career focused. Ritual, man. Oh, this is super awesome, by the way. Thanks for bringing that up. Ritual, I have to look back into, because I'm blown away and I'm super appreciative. There's a company called Haven Life. I just interviewed their CEO a little while ago, and I made a TikTok on this, but I can show you guys real quick. Ritual is releasing basically the mushroom tea. They're basically like the opposite of the psychedelic companies. They're focused purely on making legalized those semi kind of those mushrooms that are really popular in China. They're becoming popular all over the world. They're just like what do we got? We got Shaga, lion's mane, like these mushrooms that have really insane health effects to boost your immune system. A lot of proven stuff, a lot of it's still pseudoscience, a lot of stuff in between. But Haven Life launched a product lineup of supplements. So they're doing another opposite side of it. And I know this is like a free shout out promo, whatever, but I got to give these guys a lot of credit, because, I mean, check this out, man. Check this out. Look at this. They sent me the entire product lineup. There must be like $200 or $300 worth of product here. And I'm blown away that Haven Life would send this to me. So, I mean, this was super cool. So this is basically like all the different mushrooms, and they're actually extracts. They're not the pure mushroom form, because they realize that the health effects are actually in part of the part of the mushroom that there's actually not a lot of it. So even if you're eating the mushroom directly, you have to eat a lot of the mushrooms to even get the effects. So they just kind of like condense them, put them into supplements to actually get the real stuff that matters. And this is their first product lineup while they wait to get LSD federally approved for some of their trials, cluster headaches, and things similar to what MindMed is doing. I wish MindMed took this approach. I don't know why MindMed is not taking this approach. This is brilliant marketing. Like the marketing is brilliant. Everything is on point. And again, I'm not trying to plug them too hard here, but I got to give them some applause. So thanks for sending that. But anyways, putting that aside, folks, don't want to bore you with chatter as I lose my voice. This is how many videos I've made. I've made like several videos in the last week. I posted like 3 to YouTube. I've been doing so much stuff on the back end right now, but finishing it off, folks, AMC sitting at 62.90. Pulling back a little bit here, but nothing insane. GME holding up still at around 8%, I think. But I'm going to get out of here. Just a quick fun update. Stay cool. Stay awesome. Don't worry. We'll catch up soon, folks.